I'm pleased to, for the next 15-20 minutes, talk to you about Troilus Gold, still a relatively new company. Started trading in January of 2018. The big takeaways is scale, jurisdiction, and long life. I'm going to present to you a mine that, now that the PEA is out, I can show you at least 22 years mine life for the first 14 years, could produce up to 250,000 ounces a year. In Quebec, one of the best mining jurisdictions in the world. There are not many assets in the world, or certainly in great jurisdictions, that have the ability to have scale and scope for a long period of time. And I think that's what Troilus is delivering. Troilus was a past producer. Between 96 and 2010, produced 2 million ounces of gold and 70,000 tons of copper. Inmet operated it. Inmet was a global base metal company. The majority of their corporate objectives were focused on those global base metal producers. And as such, Troilus usually remained uncapitalized or perhaps didn't get the capital that the mine deserved. Certainly the gold environment wasn't great. It went into production in a $250 gold environment. We acquired it from First Quantum, who hostily took over Inmet, and really completed desktop due diligence on the history and on the geologic history of the belt. And we found that, among other things, the mine was incredibly underexplored. Jump forward to today, with drilling that's going on now, we're through 85,000 meters. We have an 8.1 million ounce equivalent resource. We have the largest land position in the Fortet Belt at over 1,000 square kilometers, and we've just completed our PEA. Currently, we have 3 drills going to 4, turning right now. We'll complete at least 20,000 meters of drilling this year, but realistically, I'd approach it from 7,000 meters a month for the foreseeable future. Highlights. I'm not going to spend time on why Quebec's great. Hopefully all of us know or read Jacob's research. The district scale exploration we've just been showing to the market for the first time over the last few weeks. 95% of all of our focus and capital is going towards the mine. But I'm going to show you some exploration regionally that we've done. And the Fortet Belt has been underexplored for at least 50 years. In fact, almost no exploration. And major discoveries are being made by us and others. And I think it's going to be a major focus of Quebec exploration going forward. Tight share structure, 115 million shares out. Balance sheet's in great shape with 30 million. We're well covered by the street, including Jacob, which we really appreciate, about $150 million market cap. 90% institutionally owned. Management and insiders own 10% of the company. We're always buying in the market, and we have the strong support of the case, FTQ, SIDEX, and the other Quebec institutions, which means a lot to us as a company, gives us partners that drives us towards success, and takes a little bit of market volatility out of our corporate plans as well. So absolutely appreciate it. Quebec is a top 5 mining jurisdiction in the world. You fly to Chibougamau, we can drive you to site in an hour and a half on all season highways. Infrastructure is amazing. Chibougamau is a town of 8,500 people, mining and forestry focused. Everything that we need to be a success and to be into production, we have. I'm going to start with our PEA and then work backwards because I think it sets the stage. In 2.5 years, we've not only drilled out a deposit which is 80% indicated, but we've now put a framework of value around it. And our initial modeling suggests a 22-year mine life where the first 14 years of open pit production is almost 250,000 ounces gold a year. We're only exploiting 3.8 million ounces. That's because we're working on the pre-feasibility right now. And we'll be running our reserve at 1,400 or 1,450 gold. And as such, we've run our pit shells at 1,375, trying to take on an air of conservatism. At 1,475 gold, we're in a 1,900 environment now, gives you a 23% post-tax NPV and or an IRR and a $580 million NPV. 4-year payback. CapEx is low at $333 million. I'll show you why. Operating costs benchmark really well at $1,050 gold. This PA is is unlike your typical PEA. The majority of our cost and hard estimates are based off of firm vendor quotes. As such, we think it gives maybe a little more validity to some of our numbers. Strip ratio of 3.9. At $1,950 gold, most projects look amazing. Troilus is $1 billion plus after-tax project with, almost a 40% NPV. More importantly, is the left side at $1,250 gold. We still have $320 million US after-tax NPV and a 12% IRR. Gives us a lot of margin in this environment to operate, and shows how robust the project actually is. Our production profile. First 14 years is open pit. In year 5, we produce actually almost 300,000 ounces of gold before you talk copper and silver on top of that. You can see in year 14 on, we start to get into the underground. What I would suggest to you, and I'm sure everybody's read chapter 24 of our 500-page PEA, we also look at an open pit only scenario where the mine open pit goes from 14 to 16 years as we go a little bit deeper, gives you a $520 million US after-tax NPV and same IRR. The underground has been well engineered. It is a low-grade bulk tonnage deposit, but certainly with the success we're seeing, we expect that the open pit is going to continue and move the underground out. We're looking at 35,000 tons a day of operation. When you take all of that into consideration and you plot it, and this is a little bit promotional, but we really want to get across the scale of what Troilus could be. So if you assume no other mine comes into production that's developing, and you plot our full production against 2019 actuals and 2020 guidance, Troilus will be, or has the potential to be, a top 10 producer in Canada. And I think that's significant. There are very few assets currently at the stage that we are that has the ability to produce at this level for a significant period of time. So scale and scope is important. And why does it work so well, and why is our CapEx so low? It's really this slide. We inherited just absolutely incredible infrastructure, and First Quantum did an amazing job maintaining a lot of this, and we've invested a lot of money. We have 60 kilometers of power line that's been completely upgraded by Hydro-Quebec. We get power at 3.2 cents a kilowatt hour. Production ready. No upgrades needed. 40 kilometers of haul road, resurfaced, production ready. To build that from scratch is $1.5 million US a kilometer, plus probably 2 years of permitting. Production ready. 50 megawatt substation, ABB has just left site. Production ready. That's a $40 million capital item that's capable of running up to a 50,000 ton a day mill. Our camp sites, we have a construction camp, which we're using as our exploration and environmental camp right now, in place that can be expanded, as well as the original site of the camp is in place. All power, water, potable water, septic sewage is in place. And probably most importantly is underneath these pictures is our tailings. We have 6.5 square kilometers permitted, will need to be amended. We have an active mining lease as well, but that will be adjusted. It's an upstream construction. It'll be adjusted to a centerline construction that thick and tails will have life of mine capacity. All of that together, which is production ready, it has a value in hard dollar quotes of about $350 million US. Our capex of $333 includes $178 million for the mill, $75 for pre-strip, ancillary buildings, etc., and tailings modification. We have firm quotes from Komatsu for the fleet and partnership with the First Nations to build and operate our camp. So, if you're to add the 350 or 333, the 115 for the fleet and the camp at 25, you're looking at an $800 million plus capex if you were to build this from scratch, which essentially aligns itself with Cote, which is currently being built by Gold and Sumitomo. So on a production versus capital basis, or capital intensity index, we plot very well against these other great projects, and it simply shows scale versus capital. And that's what certainly I think a lot of investors should look for. Operationally, we have everything very well benchmarked. No numbers there should seem out of whack. 215 per ton moved. Processing, we don't have a cyanide plant. We're at 35% of the gold comes out in gravity. The remaining count goes to a copper gold con that'll go to the Horn smelter. So that saves a lot of money on the processing side and benchmarks very well. So here is a map of the Abitibi, and the Abitibi has produced over 300 million ounces of gold, and we know all those amazing deposits: Malartic, Horn, Goldex, LaRonde, Lamaque, Windfall, New Discovery. Osisko's doing an amazing job in taking all the drills. Here we are up in the Fortet belt, same greenstone belt, same age, slightly higher metamorphic grade. Difference is we're buried by 10 meters at till. As such, not a lot of exploration has happened at all. On the right side, you can see the mine and where we've added the resource. The rest is really virgin ground that has seen almost no exploration over the last 50 years. A blow up of our site, this magnetic low that comes through, and think of it more as a structural trend. We've modified the historic model, which I'll get to, and applied more of a structural model on top of the resource. And what you've seen is this significant resource growth over 2.5 years, where we've increased the indicated to 4.96 equivalent and the inferred to 3.15, one of the most aggressive growth profiles out there to date. In cross-section, this is what it looked like. This is what we inherited. About 2 million ounces is low grade underground, and what we have now is a 22-year mine life with 14 years open pit. Focus on the southwest, though. We've defined 600,000 ounces equivalent in 1 month of drilling. Low strip, highest grade on at the mine, and we think that's going to have valuable contributions to our deposit as we move forward. Drilling profile. Big gaps, and when there's gaps, it truly is a gap. There's no drilling. We've only really had 2 drill campaigns. Our third is underway, and I think we're going to be able to deliver quite a bit of growth to the market, both economically for the PEA and to the mine life, and hopefully supplementing the grade as well. And geologically, this kind of sets the stage. And I won't go into a lot of it for this forum, but the volcanics and the intrusives. Historically, the gold was thought to be hosted in the breccias of the diorite. What we found is that the breccias make a great host, but the structures control the mineralization. And this northeast, southwest structure along the margins of these stratigraphic units and the structure associated with them form great conduits. And as evidenced by the southwest discovery, the Z87 South, it opens up 3.5 kilometers of potential ground to explore. Grades. There's always a positive reconciliation to grade at Troilus. It was never really understood. When we got in to drill, we found that the ore body, which is circa a gram equivalent, has this high-grade overprint associated spatially with areas of cross-cutting brittle deformation. You can see it in the pit wall there. You can see it in the core here. Getting some pretty spectacular intersections, 20 meters of 4 grams, 42 meters of almost 3, 7 of 20. This persists across the belt. As we started to explore because of COVID, we started small, started regionally before getting back to the main mine, where 90% of our focus is. Bayan, 8 kilometers away, I'll show it to you, almost 10 grams. Tessard, we released this week. Brand new discovery in outcrop. Again, because we're buried by till, very little exposure. You have to dig, you have to really focus. But we found 6.5 ounce gold in outcrop, and I think 70 ounce silver. So as I go through the regional stuff, here's Bayan, 8 kilometers from site, 10 gram material. We've uncovered through boulder identification, tracing the outcrop over 250 meters of exposed material running 2 grams. Great opportunity. 36 kilometers away from the historic Tortigny deposit, we found 26-gram material in outcrop in an area that's never been explored. And then this week we released Tassard, 10 kilometers due south from the mine, 3 kilometers from our power line that goes right to site, a zone which is now 40 meters wide, but we actually found mineralization over 400 meters, giving you some of these ridiculous grades, which is exciting. We won this week at the Explore conference against the Cisco, the Sustainability Award, because we've been the first company in Quebec to receive our Ecologo certification for sustainable development. Congratulations to my team. And what you're going to see for us, and then we'll wrap it up because I'm done, is 7,000 meters of drilling a month. Some more regional stuff to come. Metallurgical work being finalized, and pre-feasibility into next year. So we're going to be very newsy in a very exciting environment. Thanks, Jacob.
Okay. Thank you, Justin. So I know one of the things you get asked most is, what about this exploration? Is it a distraction? And I know you want to make shareholders understand that Troilus and the pre-feasibility study is really the major focus of the company. Is that not correct?
I mean, 100%, 95, 98, I mean, it's a number, but all of our focus is at the mine. We have 3 drills going to 4, expanding the southwest zone where we see a ton of impactful meters to the PEA. If you can add more open pit ounces at higher grade early in the mine life, huge impact to what is already a great model. This regional stuff is fun, and especially when you have results, it's fun. This was us doing a first pass follow-up on an airborne survey we completed while we were working out our COVID protocols. It's about developing a portfolio of exploration for later. It's not going to be a focus, but it does add value. Maybe not today, but it will in the future. Bayan, 8 kilometers from the mine, at 2 grams at surface, could have a material impact to the mine. So certainly if we go away from the mine site, it's going to be in the shadow of the headframe.
Right. There's a question from one of our participants asking about those higher grade intercepts and if they were encountered in skarn or not.
Like at the mine site, or you know what? I bet you they're talking about these ones. So what that is, it's a tonalite. So it's an intrusive. Our friends over at QMX actually are within a big tonalite. Same thing here. So this is a big intrusive. It's a tonalitic body. And over the 40 meters of thickness that we've exposed, you see quartz flooding coming through it. So it's skarny in the sense that it's cooked it up a bit. The tonalite that we've exposed over 400 meters is highly altered with secondary quartz flooding. It's what we see locally at the mine. It's what you see in the Kenorland drill holes that came out 50 kilometers to the south. And if you look at the picture, you can see the sulfides coming in along the margins of the contact. That's something that we're seeing pervasively across the belt.